Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, September 13th, 2019. Happy Friday the 13th. As always, please hit the like button, subscribe to this channel, share this video with others, tell your friends about MasterCharts Trading. This channel exists due to your support, so thank you for continuing to support this channel. S&P 500 is at new record highs. We will examine Nasdaq and Dow Jones as Apple also nears records. Some of the more risky stocks, such as consumer discretionary, are also hitting new records. This is a good sign. We'll do an example. Ross stores. Chinese shares are breaking out. Go figure. Looks like the trade tensions are easing. Junk debt is moving higher while treasuries are moving lower. This is a normal risk on scenario. We'll look in more detail on various commodities this week, oil, natural gas, and copper. And actually, we'll look at gold, silver, and precious metals miners, GDXJ in this case. We'll look at dollar index as it pulls back, and then we'll finish off with Litecoin, Bitcoin, and Ethereum. So let's look at our record highs at S&P of S&P 500. There it is, S&P 500 ETF SPY, couple of record highs, one on Thursday, another one on Friday today. This is clearly a bullish development. A few weeks ago, I pointed out this, what I thought was a triangle consolidation. I don't normally trade, any of those chart patterns like triangles and pennants and rising flags, whatever. But sometimes they're interesting to look at. So I did point this one out, and it worked out quite well. We're seeing actual breakout out of the triangle right there on the 29th of August, and now a new record highs. So far this chart looks just beautiful. Again, this sell-off from 26th of July into basically 5th of August, that was it. And as I was saying, basically we need to look at the stocks from point of view of a bullish perspective, not from point of view of where will it top. We don't know where it's going to top. Let's look at QQQ, the Nasdaq 100 ETF. This one is basically the same principle. You can see right here on the 4th of July, I'm sorry, 4th of June this year, 2019. This is an actual alert to my subscribers. And you can see that it was done using my own proprietary trading indicators, the green, the blue, the red, and the yellow line, which you can have on your chart. You only simply need to go to MasterChartsTrading.com. That's MasterChartsTrading.com. Sign up for them, and I'll open the door for you so that you can have it on your TradingView chart. You do not need a paid TradingView account to enjoy the indicators. So pretty straightforward. All I'm looking for is a dip below the blue line and then a close above it. There it was on the 4th of June, and now we have, a few weeks ago in July we had the new record highs. We're again approaching those records. Apple, of course, is a big contributor to the QQQ as it also approaches records. Records are not that far off. The important thing is here, of course, you can see this up arrows. One, for example, in June of this year, another one in July, and then the latest one in 7th of August 2019 this year. And basically they all worked out and they all made money, and you can see that the latest alert is up 13%. And obviously it is contributing to QQQ, so you can see QQQ slightly pulled back, Apple also slightly pulled back today, but overall the direction is clearly up, the trend is up, so we want to be buying this security. We do not want to be looking for any top-end patterns. even if they look really good, like for example, this tapping pattern here from 31st of July, it just looked beautiful. But did we take it? Did we short it? No. We simply looked for a pullback. We waited for the pullback to be over. So this pullback was over basically on the 7th of August, right there. And then new record, well, new highs afterwards. Dow Jones, same general principle, very close to record highs again, approaching records. Bullish chart, we're trading it. Here's another alert on the 29th of May of this year with a nice gain afterwards. Several important sectors of the economy also hit record highs. Here's one, for example, XLY, consumer discretionary. And as I keep saying, this consumer discretionary is basically the most economically sensitive um, sector out there. And when it is hitting record highs, which it just did on on Thursday, 12 September 2019 this year, this just means that economy is in a very good shape. Consumer discretionary contains just that, discretionary stocks, and people spend money um, discretionarily when they have that money. And obviously, people do have the money and they are spending it. So on this chart, again, you can see a very nice, I mean, I'm not making this up. These indicators are mathematically calculated. So this alert here from the 3rd of June going into 4th of June, you can see it came down, the price came down to the blue line. In fact, I can backtrack a little bit. You can see I'm going to advance one day at a time so you can see what I'm talking about. I'm not making, these lines are not drawn by freehand, they are calculated. You can see it right there. And there's the touch of the blue line dip below it, and there's the rally above it right there on the 4th of June. And this is all I need to know. And this is what I basically do, and we have a nice trade that goes in our favor afterwards. So overall, this is how I trade. This is basically all I do is I'm simply looking for quote unquote oversold stocks. And in this case, this stock was obviously oversold. And it bottomed exactly where I wanted it to bottom. I wanted to give another example of a recent trade, and actually Ross Stores is a part of XLY or consumer discretionary. So here's what we did back in May of this year. Same thing basically. Now, how do I know that the stock is in a bull market? I know it because it is no longer in a bear market. And here's that breakout. I'm gonna mark it on the chart right now. Right there on 18th of January of this year. And afterwards, all I need to know is, is a setup really good? For example, do we have a close above the blue? Yes. You can see this up arrows. These are actual alerts to my subscribers. And the latest one resulted in over 17% gain. That one occurred on 14th of May 2019. You can see a very nice move higher. So this is very simple, straightforward. There's no need to learn complicated patterns, anything of that nature. All you gotta do is just apply the indicators. You got 4 lines and it's straightforward. All you need to know is when to buy and when to exit a losing trade, which does occasionally happen. I have about close to 80% success rate right now. So overall, nice trade here for Ross Stores, and we're enjoying the gains basically. On the international front, here is ASHR, which are Chinese mainland shares. So here's Chinese mainland shares, ASHR. Uh, Never really went into a bear market, so you can see that initial breakout was right there on the 5th of March of this year. And then afterwards, we're looking for pullbacks. And there was there were several opportunities, but I decided not to take some of them. And the latest one did work out already. I mean, you can already make money with this move. This is about 5% move. So latest alert was here on the 4th of September, and it went in our favor really quickly. What this is showing me is that the trade tensions and the tensions in general around the world could be finally easing off a little bit. And this is, obviously good news for the stocks, and you can see a move higher already. I think the other Chinese shares, the FXI, will probably soon catch up. Okay, let's switch gears a little bit and look at junk bonds. Junk bonds they correlate highly to the general stock market. Um, Very similar, you can see right there on the 30th of January, you can see a breakout for junk bonds, but if I make it into a SPY, S&P 500, you can see also a breakout around the same time. So correlation between junk bonds and stocks is very high. Here what we're seeing is a move higher for junk bonds as it approaches 52-week highs. 52-week highs were set right there on the 20th of June. And I think, obviously it's already bullish, but a breakout above, into 52-week highs, new 52-week highs, then that would be even more bullish. And I think the stocks would follow suit and continue higher. Overall, junk bonds, again, and stocks correlate highly to one another. The opposite could be said for TLT, or the long-dated treasuries. This is my actual trade. You can see here my entry and alerts to my subscribers. So a couple of entries here, one on 20th of December 2018. This is my personal entry. And then another one on the 11th of January 2019. So you can see that, and another alert was sent in March. Overall, you can see a beautiful, just enormous move higher, over 24%. I kept selling in quarter increments, and then when it just took off in late August, in August, and in this August of this year, I'm like, this is getting overextended. So I went ahead and I closed this position right there on the 10th of September, and I enjoyed very nice gain. So gain, even though I sold in quarter increments, still a very nice gain, a very solid trade. And you can see that I exited, in good time basically. And you can see a pullback already unfolding. Where is this going? So treasuries usually gain during the time of uncertainty, and at this point, perhaps uncertainty is resolving itself, perhaps not. But the way the chart is looking, I right this instant don't want to be buying TLT. I want to wait at least until we see some sort of a bottoming pattern around the blue line. If we see a bottoming pattern, great. If we don't see, then we could continue lower, and then we'll need to act accordingly afterwards. Overall, again, I think treasuries are representative of a conservative scenario where uh, perhaps trade agreements would not have been reached, or perhaps something even more sinister would have come to pass. Right this instant, it looks like the tensions are easing off. The way the chart is looking, the tensions are easing off. Investors are relaxing and shifting into stocks. As I kept pointing out, stocks are hitting record highs. So this is again a good news and showing a lessening of the risk. So right this instant, I would wait with TLT and bonds in general. perhaps take some profits if you have a very long-term accounts. My relatively short-term trading, I already closed the position, so we'll need to just kind of um, see where this unfolds. All right, let's switch gears and let's look at some of the commodities that we trade and track. So here's one, excuse me, if it loads finally. It's a little bit slow right now, but let's hope it will load. Okay, let's look at oil. So here what I'm showing is US oil. It's a CFD or contract for difference for light crude oil, West Texas Intermediate. You can see the downward facing arrows because I think that this is a bearish security now, and actually some of those I took myself. Uh, I'm still waiting for a big follow through, and I'm hoping that this time is the charm. Looks like oil should be going down from here. Natural gas actually is rebounding, but it's rebounding towards levels where traders could potentially take short positions. I would not short it right this instant because you can see right now we closed above the yellow line. You can again find out more about these indicators, the yellow, red, blue, and green lines. And so far I haven't seen a close below it. So this would be my trigger. It could continue higher, and if it gets to about $3 or so, then we'll act accordingly and maybe sell it, short it. But right this instant, I will just watch natural gas. Copper, you can see this is what I'm referring to. You can see a big push higher and a close above the red line. So now what I want to do is I want to watch if we get something of similar nature as we got in July here and in late June of 2018. We have a push towards above the red line and then a close below it. Uh, the same thing right now. We have a push above the red line, and I want to see a close below it. So at that point, if it does close below the red line, we can see the number right there, $2.67. Then we would act accordingly and short copper, but right not this instant. Gold also pulled back from a very large gain recently. You can see an alert that occurred on 7th of May for over 21% gain on gold futures. If you trade gold futures, you will know that it is a very large gain because of the leverage. Right this instant, we're pulling back towards the green line, towards the decent support level. It did bounce a little bit, but I wonder if this was it, because you can see, for example, silver actually is much bigger moves, but similar general principle. I didn't send this particular alert, but the breakout did occur on June 20th, 2019, right there where I'm hovering. This is all you need to do is you just apply the indicators to your chart, and then you can trade on your own, or you can listen to what I have to say, and these are very nice alerts as well. So right this instant we saw a bearish engulfing on the 4th and 5th of September, and and unraveling, push towards the blue line. So right this instant we're waiting and watching, see if the bottoming pattern will unfold. Same goes for gold miners, in this case gold miners, junior gold miners. You can see a very nice alert that occurred here on 18th of June for over 35% gain. Right this instant it's around the blue line, so we'll be watching for a bottoming pattern. Dollar index is pushing lower, and I want to see where it will end. It could end, by the blue line, or it could continue lower. If it does continue lower towards the red line, that would mean that we had a change of trend. It hasn't yet occurred. And individual currencies, still bearish versus the dollar. For example, here's British pound rebounding very strongly off of the lows from September, and now um, basically at the red line, basically at the resistance. And this is a major resistance. You can see before we had several opportunities to sell it, to short it. For example, in June and then late June and even in May of this year for a, you can see 700 pips gain if you shorted it back then. So right in this instant, we're at that point where mm, good things could happen, and we could see a rollover to the downside, and in which case we will act accordingly and maybe short it. Euro is doing pretty much the same thing, bouncing towards aggressive short levels, which is at the yellow line currently, but it could continue higher. Notice previous, this was not an alert, but it was a opportunity to sell it, to short it, and this would have resulted in over 400 pip gain. Bitcoin, let's switch gears to crypto. So overall, same general principle. You can trade pretty much any security with my indicators, and you can see an actual entry right there in May, good for over 138% gain, and then bearish engulfing pattern right there on the 26th and 27th of June, and a few more alerts, which were both successful right there. 18th of July and another one on the 1st of August. But right this instant, I'm avoiding trading them because of the derivatives of Bitcoin, namely Litecoin. Looks like it broke down right there on the 25th of August with already a 13% loss following this breakdown. And another breakdown occurred for Ethereum, which happened even early in 14th of August, also with about 12% gain following the breakdown. So right this instant, I'm basically avoiding cryptos and want to see where they go. That's it for today's recap, this week's recap. Please head over to MasterCharts Trading. That's MasterChartsTrading.com. Click on sign up and sign up for one of the services. You can receive alerts, and alerts are things like this. For example, for Costco, beautiful trade, 35% gain, or Ross stores, another beautiful trade, 17% gain. So things of this nature. Um, those are the alerts. Now you can also get the trading indicators for TradingView. You do not need a paid TradingView account. You just need a regular free TradingView account, and you can get the same lines on your chart. This green, blue, red, and yellow line. You can see MasterCharts Trading price action indicators are actually mathematically calculated, and that's why we have a very good success rate with the indicators. Of course, if you are ready, you can get both alerts and the indicators. All uh, our plans come with free 30-day trial, and you can get lots of different alerts. You will not get bored, I guarantee you that. Right now we have a sale still going on for yearly alerts and indicators. This is a steal at $38.33 because you can see together they cost well over $50. So do sign up shortly because this sale will not last. Okay, if you have any questions, please send them in. Thanks for watching and have another great trading week. Bye bye.